Good morning, good afternoon, and good evening, everyone, from wherever you're joining us, and welcome to today's webinar titled Insights from the 2024 Salary Survey Report by HealthEconomics.com. Before I welcome our moderator, Matt, to join me, I wanted to cover a few housekeeping notes to help you all get the most out of your experience today. First, take a look at the interactivity panel at the right of your screen with 4 tabs: Chat, Q&A, Polls, and Handouts. This is where you'll participate in the chat and Q&A and polls during the webinar, as well as access all webinar resources. We want this to be an interactive experience for you, so please send in your questions, thoughts, and comments using the chat tab or the Q&A tab, and we'll try to address as many of your questions as we can throughout the webinar. You can also explore some links and documents in the Handouts tab to learn more. And lastly, if you're having any technical issues, please try refreshing your browser and ensure that you're using Google Chrome to access this event, as it is the most stable browser. If you're still having trouble after you refresh, you can use the private chat function to communicate with me, and I'll help you to troubleshoot. HealthEconomics.com is the world's largest digital connected community for health economics and outcomes research, real-world evidence, and market access communities. Our mission is to help our stakeholders drive business, improve knowledge, and connect researchers and payer decision makers worldwide. The company was acquired by Scientist.com in 2020 and has leveraged the partnership to bring more solution-focused insights across industries. Here we provide some highlights from the report, diving into some new analyses and audience-requested insights. I'm going to welcome Matt to join me here.
Thanks, Sydney. Hello, everybody. My name is Matt McLaughlin, and I'm the Senior Vice President for Compliance and Categories at Scientist.com, and work closely with the health economics team to align both of our strategies in this space. So today, I'm very honored to be able to introduce Salary Survey. From a background perspective, we've done these before. The first we did in 2015. We repeated it every 2 years in 2017 and 2019. But this is the first time that we've repeated the survey since we had the global pandemic in 2020. So we're very excited to share these new insights. So first, let's have a look at the respondents to the survey. So 60% of the respondents were from North America, predominantly the northeastern part of the United States. And then the next batch would come from the European economic area. As we look into gender and age, you can see we had quite a nice even split for gender. Highest proportion of respondents from an age bracket was the millennials category, 31 to 40. And then equally, there's a lot of information on the screen, so I'll pull out some highlights. 32% of the respondents had a PhD. We had mostly middle management. Top 4 from most to least was manager, senior director or scientist, assistant, associate director, and then research analyst. So you can see we had a nice spread across all of the different areas within the industry, and a nice spread of educational certifications as well. So most respondents were from companies with over 5,000 individuals, so large pharma basically. Over 35% were from pharmaceutical biotechnology backgrounds, followed by consulting being the next major category of respondents. So now that we've had a little bit of background on the individuals who participated in this survey, the first thing I want to do is get into some of the overall trends from the data that we had collected. So the first thing, 288 respondents did provide salary information. These we explored a variety of factors to determine trends in the average base gross salary, bonus received, etc. And the numbers were calculated and then cross-tabulated with respondents, employee type, job level, demographics, years of experience, geographic location, years with current employer type, and many, many more. So the aim of today is that we're going to pull out some of those trends for you and hopefully give you some really nice insights that you can take forward into your own career. From a salary distribution perspective, the majority, 64% of respondents, made a 6-figure salary, so over 100,000 USD. with over 24% of respondents having an annual salary between 100 and 150,000 USD. We tried to normalize these figures as much as possible based on various different exchange rates and things like that. So first thing I want to do is just compare that from the last survey we did in 2019. We did have less reported salaries on the highest and lowest end, which did narrow the distribution a little bit compared to 2019. But most respondents in 2019 had a salary in the bracket of 150 to 200,000, whereas in 2024 we saw the majority of respondents in a lower bracket between 50 to 100,000. When we look at the distribution of consultant rates, 62 consultants did reply and participate in the survey. The overall median rate was about $160 an hour. The average consultant rate is about 250. That's dollars in USD, but appears to have a split distribution. Nearly a third of the responses charged between $50 and $99, so $50 and $100 basically, and then it jumped to that higher end, as you can see from the data. And then from a consultant, the change from 2019 to 2024, a lot more respondents charged between or a lower fee of $0 to $20 an hour in 2019, but there's been a more moderate distribution in 2024 with fewer respondents at either of the price extremities. So that's the first bit of analysis that we wanted to share with you. I'm going to pass this back to Sydney now because she's going to have another question for you.
Thanks, Matt. So we'd like to hear from our audience's perspective as to why there's been a decrease in lower priced consulting. So take your time to type into the chat tab if you can. Let us know your thoughts on this. So are these changes in salary and consultant distributions what you expected to see post-pandemic?
Fantastic. So whilst everybody's doing that, the next thing that I would like to do is just break it down into a little bit more specific in the European sector now. So this is a unique analysis to this presentation. If you do download the report, I believe it's available in the Hands Out tab, then you won't get this specific piece of data that we've done an analysis on. So across various job levels in Europe, so that's CEO, manager, vice presidents, etc., the sectors that have the highest reported salaries were pricing and reimbursement and real world evidence, as you can see down here. On these tables, the things that we'll be pulling out indicating the highest, median responses, etc., just have a look at those blue boxes. So then next, from a sort of looking at raises now, so salary increases, the most common raise percentage was between 2.6 to 5%, with 39% of respondents receiving that range. One thing that might be of interest to know is 10% of respondents did receive a raise over 10%. So possibly everybody will be pleased to hear that the CEO was least likely to receive a raise, whereas the assistant and the associate director, senior scientists, etc., were most likely to get raises. So then, if we rather than look at it from a job role perspective, if we look at it from a job sector perspective, what does the data show? Well, really, the bottom axis show how many respondents from that sector got a raise. And then obviously on the left axis, so you can see here, the what that percentage raise was. So two things that we noticed: respondents working at specialty pharma companies, health technology assessments, and as healthcare providers all reported receiving a raise. And from a CRO perspective, so contract research organization perspective, these had the highest average raises at an average of 10%. So alongside raises, obviously benefits is a critical part of your compensation package. And we did have a few questions in this area. So one of the things that we looked at was what are the trends within company benefits? So as you can see here, retirement plans even was a very popular benefit. 62% of respondents confirmed that they had those, and maternity leave as well was equally up there. 44% of respondents received some type of stock option. And then, just on a side note, from a commission perspective, that was one of the least or least reported benefits as part of your compensation packages, with only 9% of respondents actually rating or referring to a commission, which obviously is very much a sales focused incentive. However, as part of compensation, bonuses are a critical element. There was a mismatch between the highest earners and the highest bonus receivers. So the highest median salary overall was the VP, followed by senior directors and scientists, but highest bonuses were in academia, specifically the deans and the professors. And trends in bonuses can also be looked at from a sector perspective. Again, similar to what I was mentioning earlier, this is a unique piece of analysis that we did for this presentation. And really, if you look at the pricing and reimbursement sectors, medical affairs as well, these two areas earned the highest bonus. Additionally, all respondents from these sectors reported getting a bonus, which contributed to that high average. In other sectors, you can see that there was a slight decrease with regards to the number of people who did get a bonus in each sector. It actually turns out, on average, those with a PhD, a doctor of pharmacy, or a registered pharmacist made more than those with an MD, except in pricing and reimbursement, where individuals with an MD or a Master of Public Health made the most. So I wouldn't say that the MBA really was driving in all areas. You can see here that one particularly was noticeable actually within the health economics outcomes research area, but not broadly across all areas. So if we look at the job sector and the geographic location now, across all sectors, those in North America were on a higher salary than other geographical regions. This is true not only in this industry. I worked in science as a geneticist for many years. It was equally true then, although that was 20 years ago, which is a little bit scary. But yeah, if from a salary perspective, North America certainly leads the way compared to other regions. As we look at job level by job sector as a summary here, you can now start to see that what we have is a decent spread of results. We are missing some in the market access and value access areas, but you do tend to progress salary as you go up through the rungs within a company, which is obviously to be expected. But this gives you some data around that progression. And then an interesting one, again, it's data that confirms preconceptions, etc., is the longer or the more experience you have within the industry, the higher your salary goes. We have quite a nice correlation with this, as you can see from the data. So the blue dots on here is the median salary. The turquoise or the aqua color, I guess, is the bonus. So this completely followed expectations. If you look at years of current employer, personally, this data also followed my expectation, which is you do not necessarily receive compensation in line with staying at an organization. We do tend to see, and this is true in other industries, that by moving employer, you can increase your salary, you can increase your benefits, etc., quicker than staying there. One of the things that we noticed was, at about 20 years, there was nobody that went above. Even the individuals who'd stayed at an organization significantly longer did not beat that point. An important factor that could improve long-term salary options is effective negotiation. So we can start to see that there is a little bit of a spread with regards to people who have attempted negotiation and who hasn't, but I'll come back to that in a second. First, what I wanted to take a look at or show you some data on was the pharma and biotech salaries. This was obviously the largest proportion of respondents that we had within the survey, and with a roughly 35% being in that industry. Salary ranged from $2,500 a year for a student, obviously a little bit of an outlier there, up to $395,000 a year for a vice president working in the health economic outcome research area. So you can start to see a bit of a spread with regards to the data here. And then if we were to look at the pharma and biotech based a little bit more on the size of the organization, so splitting out, very large pharmaceutical companies or organizations to ones below 5,000, then the data really shows that 64% of respondents work with more than 5,000 colleagues, and the median salary and bonuses with that group was slightly higher than with the companies at the smaller end of the scale. Obviously, we have to factor in that within this there's a huge difference with companies under 5,000 compared to those over 5,000. But again, we just wanted to show you some data to give you an idea of the type of compensation that you could be expecting based on those organization sizes. So let's go back to that negotiation piece. I can see from the data that we actually have an even split with people who have attempted successfully to negotiate their salary at 35%, but we also have at least 53% of respondents who've never or do not have not negotiated their salary. Of those, the majority do plan to, though. So hopefully some of the data here can assist with that. So from the data of the survey, most respondents were satisfied with their negotiations. However, those that were least satisfied received the lowest bonuses, whereas those least satisfied with the negotiations earned the highest bonuses. So certainly I think there is benefit to always negotiating your salary, and hopefully this report can provide you some data that you can take into those discussions. On a salary, just seen a question come in, which I'll come back to in a second. So on a similar vein, those most satisfied with their job got the highest bonuses, whereas those dissatisfied had the highest salaries, which is a little bit of an interesting analysis that we picked. But the reason for getting distracted then, we did have a question come in around successful negotiations. I think the advice, I've been in the industry now 24 years. I think I would say, it's swung back and forth whether I've been satisfied with the negotiation or not. I think the most important thing is to have, when you go into a negotiation, go open-minded, go with data, and go with evidence. I think that's the three things that I would certainly encourage. What I mean by that is going open-minded in that you can have a figure in mind that you would be happy with, but you've also got to factor in the company itself, like where it is with regards to its profitability, etc. So it could be that it may be better to go in with an open mind and consider, actually, is what they're offering fair based on the position of the organization. From a data perspective, it's go in with things like this. This salary report is one of the reasons we do this, is to give transparency to salaries across the industry. And then from an evidence perspective, it's go in with a strong book of evidence with regards to what you've delivered, how you've positively impacted that organization, how you have already demonstrated working at the higher level, etc. Things like that can all have a positive impact. And then from so we've discussed this. Just to go back to some of the data now, we did look at remote working. This is relatively new compared to the previous salaries, just because of the change based on the pandemic. The pandemic obviously saw a huge shift in the way of working and how businesses are being run. So from the data, employees that worked 0 days remote tended to have the highest bonuses. However, those individuals that did work remote 5 days a week, they would equally have the lowest bonuses. So there is an element of visibility there that I think would have an impact. We would, from the data, say that 3 to 5 days working remote had the highest salaries. So again, this is something to factor in, certainly when you're in your negotiations and things like that, is looking at that flexibility. Sometimes compensation isn't always about the final salary that you receive. So key takeaways. Hopefully this data was helpful for you. As I say, the report can be downloaded. From my perspective, I think most respondents had a salary over $100,000 and are predominantly from Europe and North America. Longevity didn't necessarily result in increased salaries. I think that is something that's been true for a very long time, and certainly people should factor that in. Larger pharmaceutical companies on average pay more, and raises, bonuses, benefits vary significantly by country and job sector. But as I say, if you really want to dive into the data, then please feel free to go to the handout section of the webinar. There you'll be able to download this information and download the full report that you can then read. So it's been a pleasure sharing this with you, and I'll hand it over to Sydney.
Thanks, Matt. Great job presenting all of that data. It was a lot, but I think you broke it down very nicely. Okay. Just for our audience, if you're interested in hearing more HEOR, RWE, and market access content, you can subscribe to our newsletter to get daily personalized updates about industry news. As well, I wanted to mention a new program that we have going on, our contributor program. So if you're interested in sharing your expertise and joining the conversation with other market access, RWE, HEOR professionals, please go ahead and submit your idea, your proposed content. You can also just read a little more about what the program is. And yeah, we'd love to hear from you. In closing, thanks for attending this HealthEconomics.com webinar, and I hope you have a great day.